Hello, it's just to get the update for the 30th of May. I'm just going to quickly go through the markets. First one is the E-mini. Pretty quiet the last few days. 23.97 and 3/4 is the focus point, where our support is. Remember, got the month end and also payroll as well, I think on Friday. The Dow was slightly different, and the main difference is the fact that the blue line, which is a monthly resistance, is moving to the top of the trend, and we've talked about this before. If we don't take out that high, which is 21,169, so it's a fair way away, then that line's going to stay there. We had a very minor and somewhat weak sell signal yesterday. That's a time continuation sell, but obviously waiting for the end of the month. Nasdaq, no such thing happening there. Everything is still below price, so nothing to suggest anything like a top at the moment. If we do the Russell, still the poor relation. We came up last week and failed at this daily Henkin-Ashi line, and we're a little bit in no man's land really. In Europe, it's a different story. We had a buy signal on Monday, which Germany was open, but the UK was closed. These are all time continuation buys, so there's actually a cluster of them. There's not a great deal going on at the moment, but normally buys as continuations. You can see them here and here, especially if they're at support. So this one is far more powerful than these current ones because we're not at a support point, whereas there we'd hit a daily level pretty much to the tick, and we had a weekly level just slightly below it. If we do on the Euro stocks, different story really. No patterns emerging, although we have just about held that daily Henkin-Ashi support on a closing basis. FTSE, it's been the strongest apart from the Nasdaq, and it's pretty quiet. There's not much in the way of ranges each day, but it's just gradually going higher. 73.75 is the key support, which is a weekly, and we held that about 10 days ago pretty much perfectly. Go on to bond markets, as it is payroll week. Bonds have been a little bit nondescript, but yesterday finally took out this daily level, and so now we have 154.06. This is on the Treasury bonds, having held the support. The real focus is 156.10, which is a big weekly level. Also like to look at the ultras, which is the 30-year interest rate. Tends to be a lot more volatile. We've only got one daily resistance left, 165.19, and then that would open up the upside, and again we've sort of broken out on a minor basis. Do the 10-year note. Still a little bit of work, but again we held the nearest Henkin-Ashi support, 125.23.5, and the low was one tick above it. Do the 5-year note. 5-year notes sometimes can lead the market. You normally tend to get either the extreme long end or the short end leading it. Very close to that final resistance, 118.09.5, and that was one tick below it was the high. So that's our focus there. So there's a few levels above on treasuries. Take them out and it opens up some space for some further rallies. I think what's interesting is the market thinks there's going to be interest rate rises, and yet bonds are going up. Doesn't make a whole heap of sense, but we're more interested in the price action. If we do Europe, we have the Bund, German 10-year. That was open on Monday, so took out the level. It's pretty quiet. The real focus is 163.16, so about another 80 ticks above. Good support at 162.02, which we held easily today. Do the UK market. UK's being buffeted a little bit by opinion polls, which is really so it's a little bit volatile short term. There was polls that suggested that Labour might win, which logic would send the gilt market into a complete collapse as interest rates soar. And there you go, gilts are up today, or unchanged, so they don't believe the poll. Going to currencies, we had the negative signal on the euro dollar about a week ago. We did spike lower in the quiet session early yesterday morning, which is basically stories out of Greece. I think the market's probably bored senseless with Greece. It's been going on for so long, and it rejected it, so not a great deal going on there. The pound got hit by this, did get affected by the change in the polls. So the pound had a little buy signal yesterday and then was down overnight, and now it's not down too much. We're sort of trapped in a very narrow area, so we're waiting to see which way it goes from there. Personally, I'd leave the pound alone. It could just get jerked around by news stories until the election's over there, which is Thursday week, I think. Australian dollar, pretty quiet. Yeah, we've had a negative signal last week, but not much going on. If we move on to gold and silver, they are a bit more interesting. So we broke out on Friday, had a bit of a reversal yesterday, and they are recovering again today. It's 1255.7. That is the critical point, and I think we held it on the Friday pretty well. So that's your reference point, tacking up to 1300. Silver managed to close, I think, above 33 or 34. Let's just look. Yes, it did. So it closed, I think, at 37. I think it was 39. It's got to really start pushing on. We'd like to see, once it takes a level out, to accelerate. So I'd need to see something decent on the upside today, and definitely by tomorrow. If we reverse back down, you can see that it's trying to build a time continuation sell, so we're a bit of a flip point there. Corn, moving on to the other grains. Weekend saw a sell-off last night, and then we have the first real crop ratings coming out, and so the market's gapped back up again. Still not a great deal going on, but it's coiling for a move. We do wheat. Wheat's sitting there, couldn't be more boring really. Soybeans, very weak yesterday, and we have taken out that monthly support. So we talked about 926, we closed right on it to the tick on the Friday, so we didn't know which way it was going to go. It's got to recover back above 926 on a closing basis to suggest a false break. Still got one more level, 886.5, but that's a fair way away. That's nearly 30 big figures. And if you look at the actual complex, soy meal broke down earlier, so we were holding that monthly level for quite a long time. We broke it, and then we've dipped lower. If we do rally, it's trying to build a bullwhip signal, but it's not at support, so not overly interested in that. If you do bean oil, that also broke down. Took out, we had the sell signal last week. Had to wait and see whether it closed below the final support, which it did, and we've moved down. The target is a long way away, 28.49. Do crude. Crude, we had yes, we had a breakdown, and 49.98 went up there on popped above it, but then we haven't closed above it. Today is looking weak again, so it's gone below there. If we take out 48.18, that level is going to disappear because it uses a 5-bar pattern. The real focus is 47.32. So we had a big sell signal, we have a knee-jerk bounce, but it fails basically, so that is still negative. Just a final thing on sectors or stocks, and it's a common pattern. It's happening on a large number of stocks. It's basically this: the monthly line, which in most cases goes back a long way. So well over a year. We had a breakout back in November, just after Trump. And now what's happened is the highs that were created in March, of which a lot of markets did, if they haven't taken out that high, the monthly resistance has moved to the top. That's happened on a lot of sectors and a lot of stocks. So doesn't mean that they can't rally. They can rally. They can rally up to these levels. So it's not necessarily bearish, but it creates a focus moving forward. So things that, when they get up to these levels and then we get some negative signals, then we'd be very, very interested. So an example that's a little bit nearer to home, RHS, which is consumer staples, which was on MarketSmith the #1 sector last year. If I just push this together, so it was #1 of #1, went on a real rip, topped out, monthly move to the top. We came all the way back, and now we're starting to approach those highs again. So we had a bear cage and a time continuation sell yesterday, although the bar itself wasn't particularly negative. But we're very interested in this. So it's a little bit higher up, 130.44. We're currently at 28.40. So very interested. And that's the sort of pattern moving forward that we're looking for in other things. Okay, another update tomorrow.